Bismillahirrahmanirrahim. Distinguished guests, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. Good morning and Ramadan Kareem to all Muslim participants. It is a pleasure to be here today to deliver the keynote address at the 9th Malaysian Financial Planning Council or MFPC e-conference. I would like to extend my appreciation to the MFPC for their commitment in facilitating the flagship conference via the hybrid approach as we transition to the endemic phase. As we do so, the notion of agility, adaptability, and perseverance has been consistent and shared across organizations, businesses, industry players, and the public in general. As a result of the collective efforts of the society, including from the government and regulators playing their respective roles by extending various measures and reliefs, growth of the economy remained on a recovery path in tandem with rapid vaccination progress, a decline in virus cases, and the gradual easing of movement restrictions. Given the theme of today's event, post-pandemic transformations, aligning focus and assessing impact, I will begin with a few relevant key domestic economic statistics before delving further on the SC strategic priorities to provide perspective to the financial planners and other participants here this morning on the journey ahead. Malaysia's real gross domestic product growth is projected to accelerate to between 5.3% and 6.3% in 2022, as the recovery momentum picked up towards the end of 2021 and most mobility restrictions were lifted. Zooming into an area that hits home, it is encouraging to witness that the Malaysian capital market remained resilient with a 3% growth from 3.4 trillion ringgit in 2020 to 3.5 trillion ringgit in 2021. Notwithstanding the various challenges brought by the fluctuating economic conditions, the capital market continued to play its critical roles in financing the economy with notable increase in fundraising activities and encouraging growth of the overall fund management industry. Total funds raised in the capital market remain robust, rising to 130.9 billion ringgit in 2021 and above the 5-year pre-pandemic average of 121.4 billion ringgit. Likewise, the fund management industry grew further last year, with assets under management totaling 951.1 billion ringgit, which is an increase of 5.04% from 905.46 billion ringgit in 2020. This reflects increased diversification of financial assets in both domestic and foreign markets, with the unit trust segment remaining the largest source of funds for AUM. Growing hand in hand, AUM recorded an increase of 3.69% from 216.8 billion ringgit in 2020 to 224.8 billion ringgit last year. In the Islamic wealth management space, the Islamic fund and wealth management continued to help propel the Islamic capital market to greater heights. The number of Islamic collective investment schemes comprising unit trust funds, wholesale funds, private retirement schemes, real estate investment trust, and exchange-traded funds stood at 386 as at December 2021, including 16 Islamic SRI funds. Whilst the Malaysian capital market is set to benefit from the projected domestic economic recovery, it is essential for the stakeholders to align focus and assess impact to deploy different approaches and initiatives that best cater to the needs of the market. In doing so, the SC has produced the Capital Market Master Plan 3, or CMP3, a 5-year strategic plan for the growth of Malaysia's capital market. Allow me to share highlights from the CMP3 relevant to the financial planning industry, which is also meant as a shared journey to be undertaken to build a thriving Malaysian capital market. The strategic initiatives over the next 5 years will be guided by both key development and regulatory priorities. These strategic thrusts focus on catalyzing competitive growth, empowering investors for a better future, and shaping a stakeholder economy, whilst embedding shared accountability, prioritizing efficiency and outcomes, as well as embracing technology. Central to the developmental landscape is the rise of the stakeholder economy, where there are growing calls and demand for businesses to create value for society and environment, besides fulfilling the goals of shareholders. Shaping a stakeholder economy can be facilitated through effective capital mobilization, manifested by sustainable and responsible investment and Islamic capital market solutions to achieve a transformative economy that is both sustainable and accessible. The investors are at the heart of achieving this goal, and therefore, I would be remiss if I did not speak on the importance of the roles the financial planners play, and that is to uphold the highest standard of professionalism by giving investors sound financial advice and ensure they meet their long-term financial goals. Investors need to be able to assess the impact of their investments and priorities, and financial planners are indeed the bridge to enable investor empowerment. At the SC, we aim to facilitate a conducive environment to support investor empowerment and elevate financial literacy in line with the CMP3. Under the aegis of the SC's InvestSmart brand, various investor education initiatives were conducted to empower the Malaysian public. These include the annual InvestSmart event, free financial planning clinics organized under FinPlan for You in collaboration with MFPC and FPAM, seminars, online webinars, and joint events with other agencies. As in previous years, over 450 free one-on-one financial planning sessions with licensed financial planners were offered to the public at the virtual FinPlan for You Financial Planning Service Desk held in 2021. Since its establishment in 2014, InvestSmart has reached out to almost 2 million individuals through these initiatives. As of January 2022, I am pleased to note that there are 15,802 registered individual members of MFPC, out of which 7,145 are registered financial planners or Sharia registered financial planners, signaling the financial planning profession's growing importance and reputation in the financial services industry. Another area of the CMP3 that the stakeholders can also realign focus is within the social component of environmental, social and governance. This is especially crucial given that the health pandemic has brought about social issues to the forefront of investors' attention, raising the need for businesses to play a larger role in respect of their broader stakeholders that include consumers within vulnerable communities. Preserving these interests of society are also in line with the Islamic concept of Maqasid al-Sharia, as mentioned in the CMP3, where it promotes the attainment of benefits and prevention of harm for the people. It also underlines the essence of sustainable economic development, encompassing key aspects of life and community, including inclusivity as well as facilitating investments for socially beneficial outcomes. Ladies and gentlemen, as we strive to enhance professionalism in the financial planning industry, it is imperative to raise the bar on professional standards and conduct requirements. In this respect, the SC on the 1st of April this year issued guidelines on conduct for capital market intermediaries, which also applies to licensed financial planners. These guidelines aim to foster good business conduct and a good corporate culture that is centered upon the fair treatment of clients and to promote trust in all intermediaries. Within the financial planning space, it is well recognized that the corporate culture has a dominant influence on the way one conducts business with customers. The financial planning industry's asset, trust, can be significantly undermined by poor conduct and affect sustainability of business. Further to the requirements under these new conduct guidelines, financial planners would need to demonstrate skill, care, and diligence when providing specific advice on listed securities and unlisted debt securities by complying with enhanced requirements added a year ago in the licensing handbook. As at the end of 2021, 20% of financial planning firms had representatives fulfilling the additional competency requirements to provide specific advice to investors on a wider spectrum of securities. Towards ensuring that the specific advice provided is suitable for clients, a financial planner must undertake suitability assessment before making recommendations to ensure that the product is suitable for the client and if it matches the risk profile and needs of the client. Whilst regulation can play a role to promote the right culture, the industry must also continue to shape the right behaviors within their own organizations. To this end, it is commendable to see the industry's harmonization and elevation of the Code of Ethics and Best Practice Standards by the relevant certification associations. The Industry Code of Ethics, which espouses principles such as integrity, fairness, and objectivity, sets the professional conduct expected of a licensed financial planner. Staying with the professionalism aspect, this time specific to the Islamic capital market, the SE have also taken steps to strengthen the Sharia governance framework by revising the guidelines for Sharia advisors. The revision had been undertaken to prescribe greater professionalism for Sharia advisors in carrying their roles and responsibilities, as well as to scale up their knowledge and expertise on capital market developments, incorporating continuous professional development as a requirement. Furthermore, the revised guidelines for Sharia advisors emphasizes the need to possess relevant qualification, experience, and provides greater clarity on conduct requirements. The CMP3 also sets the tone and direction for the next phase of development. That includes focusing on facilitating greater digital inclusiveness across a spectrum of investors. In facilitating economic recovery on the back of the pandemic situation, there is a need to embrace greater technology adoption. As we see how the impact of technology and its evolution with innovation has changed the way we live today. This is due in no small part to its capabilities in facilitating more affordable devices, secure payment processes, and high-speed communication infrastructure. From a capital market perspective, digital advances allow for greater upscaling of existing capabilities, open new market segments and business modalities, and provide more inclusive solutions for fundraising. Inclusivity has also been driven through digital intermediation models, when in 2021 the market saw the emergence of another digital-only broker to cater to the growing number of retail investors utilizing online brokerage accounts. This is especially relevant given increased retail interest in the equity market during the pandemic, pushing digital brokers to new highs whilst gaining a retail market share of more than 5%. Another digital segment, the Digital Investment Management or DIM, continued to expand its offerings and grew in an upward trend over the years with a total assets under management of more than 1 billion ringgit as at end 2021. These digital avenues have proven that the application of technology will enable greater reach to the growing investment needs of the emerging digital generation of investors. The economy is beginning to recover from the economic fallout of the pandemic. Whilst we are transitioning to the endemic phase, we must remain vigilant in aligning our focus to serve the greater good and needs of the investors in these challenging times. Against this backdrop, we must continue to explore all options to mitigate impact and support recovery. And together with the collective efforts of the financial planning industry, we can play a crucial role in facilitating economic recovery and provide avenues for investors to play that role as well. With that, I wish everyone a good and productive conference ahead. Thank you.